Welcome back. The final trading day of the month, has market mixed. The Dow Industrials right now flat, down 2 points. The S&P up 4 points. Nasdaq's up 27 right now. Joining me right now is Kyriba senior strategist Wolfgang Koester. Wolfgang, great to see you this morning. Thanks so much for being here. What's your take on year-end right here? Final day of the month. We are looking now into 2023 and expectations. How do you want to be invested?
Well, I think you need to look at the companies that are really looking forward to how to better and best predict your cash and protect your cash. So it's all about cash flow. It's actually back to the basics. Obviously, cost of capital a lot more expensive. The CFO is being asked by the CEO to partner to ensure that they have complete visibility and predictability to where the cash is going to carry them through 2023 into 2024 at the lowest price and cost.
Why? Do you think that we're seeing signals of recession in 23? What's your expectation of the macro story? We've got Federal Reserve Chairman Jerome Powell set to speak at the Brookings Institute today. He'll talk at 1:30 p.m. Eastern, but he's expected to bring the hammer down on more rate hikes coming, discussing the economy, the labor market, ahead of the year-end Fed meeting, which is happening in 2 weeks. Central bank expected to raise rates another half a point. What are you expecting from Powell today?
Well, I think we expect him to kind of really almost react, not actually lead this, which is kind of the problem. We talked about this for a while ago already about, I'm absolutely convinced that we're going to hit a recession. Without a doubt, we're going to hit a recession. Just the question is how big of a recession. That's just what happens when you have interest rates higher than inflations, et cetera, going on. You're going to go into a recession. You're going to slow down economies, and that's going to be healthy. Just the question is how deep you're going to go. People are now talking about that they're hoping it would only be 2023. A lot of CFOs that we're talking to and CEOs are preparing for that actually rolling over into 2024. So from an investor point of view, you really need to watch where the cash is going. And then obviously, we talk about this a lot. What is the dollar going to do and what currency is going to do, which is a very material risk to these corporations.
Yeah, I mean, look, I think we had, John Williams yesterday say that we're going to be fighting inflation into 2024. You're right. So do you see a double dip recession happening? Because we had 2 quarters of contraction earlier in the year. We'll get the second read of the third quarter GDP out today. We're waiting on that, 8:30 a.m. Eastern. The estimates are for growth, that we'll see 2.7% growth in the quarter for the third quarter. So how does this play out? When are you expecting contraction?
I do expect it to happen in 23, and I think the vast majority of CFOs are preparing for that, and CEOs, quite frankly, and the boards are asking. So when I'm looking at the corporations and talking to the C-suite, they're all expecting this to come back off. So I think a 2.6% number would be a great number. At the end of the day, that's going to be one indicator, and we still think that this is actually going to start coming off. And then you continue to have shocks like the railways you talked about earlier. Yeah. You got still China going on. You got all these other global economic things going on. You know, go to Germany, figure out what's going on there right now. It is not looking good. We still don't have the energy under control there. So globally, the United States is looking pretty good. Good place to invest. And you got to look for stocks, which are a great hedge in an inflationary period, that are ready to go through the recessionary desert.
Wolfgang, you talk about watching the cash. I agree with you. You look at spending on Black Friday and Cyber Monday. It was good spending, but consumer debt is way up. Household debt is way up. This looks like a game of chicken. If consumers pull back because debt is rising so fast into 2023, how much does that increase the chances that this recession is deeper than what people are predicting?
I completely agree with you. I think that what you end up having is you have people who are increasing debt, as you mentioned, and the cost of that going up much higher than they've seen last decade, right? So people aren't always prepared to manage that well, because they anticipate still, well, the cost of capital is only 3%. No, it's actually 7 to 8%. When you all of a sudden starting to have mortgages that all of a sudden go into the 7 or 8% numbers, these are serious costs that are going to impact the consumer. Therefore, people are going to have to slow down. They only make so much more money, and quite frankly, the salary adjustments aren't keeping track with right now inflation.
Yeah, great point. Wolfgang, it's good to see you this morning.
It's a problem.
Thanks so much.
My pleasure.
We'll be watching all of that. Wolfgang Koester joining us this morning.